Ladies and gentlemen, welcome back to Bull on the Street podcast. My name is Nicholas Coriano. I'm joined by Daniel Wachtel. It is November 13th, 5 p.m. How's it going, my man?
Doing well. How are you, Nick?
I'm good. I lost a little bit of money on GE today. Thanks to you, I didn't lose as much as I could have.
Yeah, well, it was the first thing I saw this morning. It was very, very nice news. Cutting their dividend by 50% for capital restructuring.
Yeah, I don't know what is going on.
It means we're losing money.
Went down 7%, 7.17% it closed at today. Their fundamentals aren't right. I don't know why I bought it. I didn't trust the management. The management's new. And I think I bought it because of the dividend. I bought it because it was on dividend. I bought it on a short-term plan. I paid for it this morning, man. I lost 3% on the stock and sold out luckily before it dipped to 7%. But
well, Nick, you weren't really wrong buying it for the dividend. I mean, it's the second time since the Great Depression that they cut their dividend. It usually would mean that GE has a solid dividend. Second time since the Great Depression.
Yeah, so I know, but you got the thing leveled off in 2012. They were at 150 billion in revenue, and then 146, and ever since then they kind of just been struggling along. I didn't see any growth projections there. It didn't really fit my criteria of where I should be putting my money in. I think if the only reason you're buying is for the dividend and the company doesn't have prospects to keep paying that dividend or keep increasing that dividend. I mean, they were increasing that dividend. And meanwhile, from 2013 to 2015, they didn't make any jumps in revenue, So how do you expect that to keep going? You shouldn't expect it to keep going. But I thought it was a rookie mistake on my part.
Well, I mean, if you just have to look at where the trouble is really coming from with GE. It's their capital. It's the GE capital portion of General Electric.
Somebody told me they sold that off. Are we sure that they still own that? Let me look.
They're trying to shrink it, but they still own it.
Yeah, I mean, I don't see if they own it. Somebody told me that they sold it off to My Synchrony Capital.
I mean, they should sell it if they haven't. I don't think they have, but
yeah, I mean, it still shows up. The website still shows up as GE owns it. So
I mean, that would be huge too. I mean, they're cutting their corporate staff by 25%. I mean, that's roughly 1,500 jobs. And
I'm not long there. I'll tell you some positions I did take long, and you tell me what you think about them. I took positions in 3 companies last week: Facebook, Alibaba, and Amazon.
I think Amazon is a solid play going into the holidays.
I don't even know about the holidays. Look, let me tell you why I buy Amazon. I'm gonna pull up the stock ticker here, and let me share the screen for those watching. And I know there's the podcast, everybody's listening, but for the guys watching, let me share my screen here. And I mean, here's Amazon. I mean, the stock's been on a run. It's trading at a crazy price per earnings, 284 times earnings. Insane. But, I mean, you look at this revenue chart here. Look at these guys. 2012, they made $61 billion. 2013, 74. 2014, 88 billion. 2015, 107 billion. 2016, 135 billion. I mean, this run rate is just, they're printing money, man. They're printing money.
They really are. And the one thing that I like about it the best is Prime. Because now they're actually getting income no matter what. So people who have Prime, and the only thing that worried me about Prime was it's free shipping on anything. So if I get a pair of shoes, it's free shipping. If I get a pool table, it's free shipping. So it's kind of, I don't know how they're working that out with whoever they ship with.
Yeah, they're gonna buy their own planes. Jeff Bezos is an animal. It fit within my criteria, not only because it's a cash printing machine, but I trust Bezos. You know what I mean? Like the guys, there's history there that shows that this guy has performed and outperformed the market time and time and again as an executive. And just look at this revenue, man. This revenue is no joke.
Well, all right. So look at their, besides their revenue, look at their net income.
Oh, well, their total net is interesting enough. They finally showed a profit this year. Yeah. So $2 billion in profit this year, and they've been floating. It's nice, very nice, yeah. And they've been floating around, you know, not showing a profit for a while, making capital expenditures. But I mean, just that run rate alone on Amazon, and then you got to factor in they bought in Whole Foods, which turns out was actually struggling as a brand, but the synergies that lay in that acquisition are just tremendous. But I think it's a buy, even at the crazy price per earnings ratio. I don't think it's going anywhere, man. These guys are printing money, and look, we're gonna shop online, man. And the same thing I like with, and really the founder, you know, the fact that the founder is still there is a big one for me. So now this one, post market, they're saying Facebook is down 4% after the market closed. I don't know if there's any news out for them that maybe that's why.
Well, that's good news for Amazon. Amazon stock surges towards 38th record close of the year.
Yeah, but and look, Facebook stock has similar fundamentals, man. You look at this first of all, it's trading at a 33 times earnings, unlike Amazon. I don't see where the growth is coming from except from acquisitions. You know, their acquisitions of Instagram and WhatsApp have led the way to continued growth. But if you look at this income statement, I mean, similar story here, right? $5 billion in 2012, $7.8 billion in 2013, $12.4 billion in 2014, $17.9 billion in 2015, and $27 billion. They almost doubled in last year in revenue. So I mean, that growth rate. This is not a chart you saw at GE, right? You didn't see that revenue systematically going up and up and up and up. And here, what I like about Facebook is, well, you may like it or not like it, but their net income is actually more than doubled from last year. So the net income went from 53 to 1.5 billion to 2.9 billion to 3.6 billion in 2015 to 10.2 billion in 2016. And I think with the acquisitions that they made and some of the advertising, I think people are advertising like animals on Facebook. I'm seeing it pop up all over the place. I'm spending money advertising on Facebook. They have a great targeted platform. They can reach people on Instagram. They can reach people on WhatsApp. And again, just that owner-led company and these balance sheet numbers, can lie, but these income statement numbers, that revenues, that's some sexy stuff right there. And then to double your net, they doubled their net, right? They doubled their net income. They went from 3.6 billion in 2015 to 10.2 billion. Flash.
That's pretty insane.
That's pretty good. That's pretty good. That's pretty good. And I still think they have some innovation. So I got them. I added them to the portfolio, and then Alibaba. I like Jack Ma.
Yeah, well, I mean, Jack Ma is amazing. But going back to Facebook real quick, do you think people are who don't use ads and don't sponsor ads, do you think just going to started getting annoyed? Like, I get annoyed with the sponsored ads that come up.
Yeah, I think users will get annoyed. I don't think it'll be enough to get them off of the platform. I think Instagram still does it very delicately. Mm-hmm. And I think that there's no other big players in the market. You have Twitter, you have Snapchat, but their CEOs have not shown the vision that I think Mark Zuckerberg has shown. If you go on Facebook now, people are going on Facebook for other things, like the feature to sell products on Facebook right now is insane. You go on there, and that little place where you look for, your trailer or used watch.
Yeah.
They have a chance at competing with Amazon there if they perfect that model, at least with eBay, right? With eBay, where they have the used goods. People are dealing with that online. So I think that's interesting. I think they will get tired of ads. I also think Mark Zuckerberg's the kind of guy that if there's another system or platform out there, he'll buy it. He'll put up the $1 billion to buy it. So I like that.
I mean, it looks like they have the cash. I can't really see too much. I don't know how much cash they have.
Let me see. I'll tell you exactly what they're showing on the cash here. We'll find out. And then we'll go to Alibaba and see what the hell they're doing over there. The balance sheet. Let's do it quarterly to see what's going on here. Yeah, they're holding on to 1.6 billion in cash, and their cash position is going up. Let's see how it's doing yearly. Yeah, so you see that they made the acquisition, the $1 billion acquisition before where they lost, but they still got 1.3 billion in cash.
Yeah, they got a ton of cash equivalents.
They got a ton of cash, and their liabilities are at 500 million current liabilities. So they got enough to take care of themselves. I mean, I'm not worried about them. They can do a secondary offering or another offering and have no problem getting cash if they wanted to buy a business. Because if he buys a business, it's not like he's buying anything. He's buying something very correlated, right? WhatsApp and Instagram were basically the same business, the exact same business.
They're not Yahoo.
I hope. Well, my mistake with GE was not betting on management, and with Facebook, it's hard to bet against Zuckerberg, man. If you followed his career, it's hard to say that you're gonna beat him when the guy time and time and again has shown up.
Yeah, well, I saw the movie. He seems like a really nice guy.
Well, I don't know if that's all. I think that movie was a little overrated. If he's so hated, why would people do business with him, man? I think that he's very smart, and he has a certain understanding of what people need, and he's obviously a good businessman, because he's running. Look, and I think the stock is more is more attractive than these other stocks. You got Amazon trading at 200 plus times earnings, and Alibaba's trading at 50 times earnings. Now Alibaba's an interesting story too. Here's the revenue for Alibaba: 34 billion in 2013. 2014 they went to 52.5 billion, all the way to 76 billion in 2015, 101 billion in 2016, 158 billion this year. That is monster growth. They grew $50 billion in a year. They almost doubled, and that's not easy to do when you're talking about 100 billion in revenue, to double 100 billion in revenue.
And they're mostly coming out of Alibaba is I mean, the stock is great, and it's a Chinese company. I don't really like Chinese companies, but
yeah, you don't understand them. Is that what it is? What I like about this, and I agree with you to some extent. I think there's a lot lost in translation when you deal with foreign companies. But what I like here is that Jack Ma was educated in the U.S. He gets the U.S. financial markets. He gets the idea of running a solid business, as opposed to some guys in tech, which are just like, hey, let's try whatever, and doesn't matter about the profit. He cares about the revenue. And just look at the revenue, man. The damn thing is growing, and it's in a sector where the population is growing. The Chinese population, the Asian population over there is booming. So when you talk about growth and what can outpace an Amazon, Alibaba is the only one I see.
I mean, if you were to look at it year over year between 2016 to 2017 March, end of March. They lost. They were at 2016. They were, I think, 71 billion. 2017 they were 43 billion. So you got that going against you a little bit.
Where? What are you talking about?
On their net income, they came in pretty light on the net income, like year over year.
Yeah, this is true, and this is I saw this, and my thinking is, look, there's guys in the sector that aren't even clearing a net income. Look at Amazon. Amazon's off the freaking map. By that standard, you don't invest in Amazon. Now, I think what he's doing is he's finally wisening up to the idea that you can run at a loss, man. Some of these guys can run at a loss and continue to operate and take advantage of the carry forwards on the tax loss and not pay the taxes on the $43 billion that you could have had, and instead reinvest it into part of the company where maybe you show it as a loss this year, carry it forward. But yeah, I did see that, but the top line growth is still there, right?
They have a ton of cash.
They got, how much cash are they sitting on right now?
Cash and cash equivalents, 143.
Wow.
Quite a bit of money.
$143 billion they're sitting on.
Quite a bit of money. But again, I just don't trust China in anything.
I don't know. I think you're gonna have to. I think it's a different China. It's a different China, you know. It's a China that's developing, that's nations developing, and we'll find out. But I hope I'm not wrong, but we allocated. We're seeing these things dip in the aftermarket here.
Yeah, well, eventually what's going to happen is that all these stocks will be brought down no matter what. It's all market risk at this point. I mean, you have good companies. You have companies that have pretty solid fundamentals, and it just really comes down to market risk.
Somebody cashed out of a big position in Facebook after hours today. I mean, big, and it dropped that price to 172. There was some kind of block trading there going on.
I like that dip.
Whew, should have bought on that dip. Man, 173. Yeah, it didn't affect the day's trading average, but after hours it got below 172.
On no news.
That must have been a block trade.
I guess some hedge fund.
Yeah, that was somebody moving a lot of stock, man. That's what that was. Let me see if there's a chart to show the kind of volume was traded here on the 1 day.
It's the only thing right now.
I mean, not even show.
That can screw up Facebook.
Yeah, someone bought 500,000 shares in Facebook after hours.
And that took it down?
I don't know what the hell is going on here, but something happened.
Well, where are they?
Yeah, they might have bought it at a discount. 500,000 shares is a lot of money. 500,000 shares times.
Well, look at it now.
Yeah, it's back up.
Yeah.
Yeah, you're only getting that price. You're only getting that price dip if you're buying 500,000 shares at a time.
And
right?
there's no liquidity really right now in that market. So $500,000 that a lot. 500,000 shares can move that a lot.
A lot. That's what I'm saying. An aftermarket trading, they probably did it aftermarket, so it didn't move it. So if it did move it, it wasn't causing a panic in the stock. That's probably why they sold it. But 500,000 times $200, what's that? 500, 1, 2, 3 times. I'm doing got the math. Call it what it is. 180 is $90 million. Somebody unloaded or bought, right? Both sides. Someone bought it and someone unloaded it. $90 million in that stock on buy volume. So they probably wanted a discount on the stock because they were buying it, but they think it's valued at above 170. And I do too, man. I think this stock is just going to keep running, man, because like I said, that revenue, at least for the next year, even through Christmas, I think they're going to show up they're going to show up when that fourth quarter reports. They're going to show up, and all the analysts, Market Edge, Ford Equity, not that they're worth anything, Credit Suisse, research team, the street, they're all saying buy and outperform.
I mean, like I said, the only people who can screw up Facebook right now is Facebook.
I don't think they're gonna, man. I think they're in a good position.
Yeah,
I think they're in a good position.
It really just comes down to how the Fed unwinds the $4.5 trillion they have in their balance sheet. So, and they're getting Yellen's out, and they're getting someone new. So you have new blood coming in, trying to figure out what the mess that the last 8 years have put into the stock market. Because they got to look at it as just a boat that's just kind of just hanging out on this nice cloud of money that they just blew into the stock market for the last 8 or 9 years. And eventually when they start taking it out, they're not going to have that. And that's what I've been waiting for.
People, yeah, there's going to be some kind of pullback here. You wonder when it's going to be.
If they screw it up, like, they can't. Like, you cannot screw it. That's why I was kind of confused when they were like, oh, Janet Yellen's out. And I was like, well, she's kind of like one of the few that kind of know what's going on unless you bring somebody else in. And we have to figure out, hopefully he's an academic and he understands what the hell's going on when we're looking at how to unwind a trade that big. It's not that easy. I wouldn't know what the hell to do if they're like, Dan, hey, come on, you're gonna be the new Fed chairman. I was like, no, I'm not. There's no way in hell I would take that job.
Wow, some large positions getting taken after the market. Look at Apple stock, same thing going on. 800,000 shares trading after the market. People are taking their positions.
Look at that jump at the very end of the chart. Look at that gap. That gap jump. Oop.
Yeah, and then you see them pick it up here. Look at this, 800,000 shares. More, 900,000 shares. People are taking some big positions today, guys.
You know who I would not buy ever right now?
Who's that?
Mr. Netflix.
Ooh. Are we going back and we're gonna go back and see what's going on there, Netflix?
Well, a lot of the companies are now like, no, you're not going to use our like Disney. It's going to be out by 2018. There's somebody else just took their.
Here's another one that's trading at a crazy PE, 194.
I mean, but people are taking their content. They're not giving content to Netflix anymore.
Yeah, it's funny because I was watching Netflix the other day. I'm a subscriber. I went back and subscribed just to get the Narcos season 3, and it was okay. It was okay.
Like that one white dude with a mustache. That was my guy.
Yeah, exactly. So now the question is, but I had the same question. I said, man, at some point Disney's going to catch wind of this, and why are they leasing out all these movies to them? And actually, if you look through the selection of Netflix, you can see where they're investing their money. They're investing in documentaries, they're investing in comedies, they're putting big money behind that. But I mean, other than that, it's gonna. I think it is going to get harder for them to get that revenue. Now here you go again. You look at their revenue, consistent growth, man.
Right. Until consistent growth, mainly they've been raising prices too. But if you're just looking at like what's going on with the actual company over the next couple of years, not good, man. It's not good.
Yeah, I mean, meanwhile their operating expenses have been getting just as high, man. It's like they're buying their growth. It's not organic.
Yeah, it absolutely. I'm trying to look at the options real quick. See what their options look like.
But they're also sitting on to $1 billion in cash.
Yeah, they got a ton of money, but I mean, a show probably costs. Like the shows they do, it's kind of.
They paid what did they pay Chappelle? They paid Chappelle a pretty penny.
Oh, I mean, it's Dave Chappelle. I pay him pretty penny too.
Yeah, I know, but for one video, that's what like to your point, right? That this is not cheap.
No, everything they do isn't cheap because it's actually really good stuff. Like Narcos is great. Narcos is great. I haven't seen anything that was bad in terms of what they've come up with.
I've seen some things. I've seen some of some of the program that they seem to buy. They're kind of TLC kind of programs. I don't want to call it TLC because I don't think they're buying it from there, but it's like really low quality made videos. Like I saw El Chapo, the documentary on El Chapo. You can tell they got it from Univision and just dubbed over the voice. Some stuff there, but I mean, I also don't believe in your local cable provider because they're screwing me to death over here and they're screwing a lot of people. So I think that people like the idea of being able to bring their TV wherever they go and pay that small fee, You
have HBO that's been doing that now too. So it's
well, that's the risk, and I think that's where they're going to go. I think that you're going to be able to go to ABC and Disney and get that same package from them.
Yeah, Hulu, you got HBO, you can do it all. The only thing that's different is that Netflix has their stuff packaged, but they're buying from other companies. You said like Univision. Like I saw that on China. I was like, wow, this is pretty stupid. And then
I don't know. I mean, first of all, the Spanish-speaking market's huge. Not to go there, but I think that you're right. That strategy of having a little bit of from outside, and then you got to be a producer of the content. That's where they're going. They're going to be a producer. So now you're betting that they can produce it cheaper than Disney or than, any of these other.
Well, Disney just pulling the rights. They're just like, no.
No. Yeah. They're not going to have that inventory for long. But you got to wonder if they can produce something that's, I mean, the Chappelle series are pretty classic. I think people will stick to some of those things. Some of the shows that they're releasing are pretty standard, and it just gives you that option to drown away. I mean, their revenues are going up. I don't like them as much. I think there's a lot of competition in the space. I don't like them as much as I do the e-commerce companies that are selling. And I don't know their CEO. Again, it's back to one of my models, man. I better know who the hell's at the head of the money, man.
He's relatively new, isn't he?
I'm not sure. Why don't we let one of our guests tell us? Let's wrap up this episode of Bull on the Street. We'll be back talking about something else next time. Any final words, Dan?
I got nothing.
You got nothing.
Do not buy Tesla.
Do not buy Tesla. Maybe we'll talk about that in the next podcast. All right, guys. Thanks for joining another episode of Bull on the Street. We'll talk soon, guys.